All right, going over the video today, up about 13K per E-mini, 1300 per micro. We have paused trading this week with the holiday week and to do some research, and then we had the Russia-Ukraine conflict, and so 13K today would put this up for the month about 5K. Here is what this portfolio has done. 2 weeks ago, 4 winning days in a row. Last week, every single day was a losing trade. It was at 38K on the drawdown, and the worst case drawdown in the last 10 years is about 50K. The worst case drawdown in the last 6 years is a 40K. So Tuesday's trade, which includes Sunday night through Tuesday, hit that 7-year worst case drawdown, and then it's bounced. And so right now the drawdown is right at about 16,000. It's not at an equity peak yet. One thing to do would be to wait for an equity peak and then trade it again on the pullback. Let's look at this drawdown curve. I have some improvements for this as well that improve this. I've added some additional functions. I'll go over that at the end of the video. I wanted to go over the daily results today. Here is the worst case drawdown, 50K in June of 2016, and then 40K is the level right here, and it pierced that. It just pierced that this week and then bounced. And so I have some updates for this. VSD and gap continuation are the two dogs in this portfolio, and we'll talk about what happens when we remove those. So up 13K today per E-mini, up 1,300 per micro. I thought this market was, we mainly look at the Nasdaq a lot because its moves are the most definitive, but we trade both the S&P 20 strategies on the S&P, and we're not trading this week, like I said, but we're going to go over the trading system signals. I also want to talk about the market in general. So if we just look at the market, it's at the highs on the week. So here's Friday, Thursday, Wednesday, Tuesday, Monday, Sunday night. Trade started here, and the market sold off on Monday, rallied a little bit on Tuesday, sold off on Wednesday, and then Russia-Ukraine. And based on what I was, my opinion of the market trade, the market trading is that it had discounted Russia-Ukraine. It had not taken Russia-Ukraine seriously at all. And so until Wednesday night into Thursday, then it took it seriously. And so what happened here in the playbook in the market is if the market has sold off, once the conflict actually starts, then the market has a tendency to rally. But the market had not sold off, and based on what I've seen, based on the sentiment that I had seen, this selling in the market was not based on Russia-Ukraine. So all this selling was really based on what's the Fed going to do, inflation, earnings, and then it sold a little bit on Wednesday night, Thursday, Russia-Ukraine, but then it's had this big bounce back. It's buying for reasons in which it did not sell, based on what I see, based on the sentiment that I see out there. So the market can get carried away and do that. It could continue. This could be the catalyst for a new rally. And it wasn't even the reason that the market sold off for one reason, and it can rally on for another reason. That is why we're short-term traders, because markets don't always make sense. And in this case, it doesn't make sense. I think it took advantage of an old pattern, which it hadn't even taken into account yet. The selling wasn't for Russia-Ukraine wasn't even in the market, except for what happened on Wednesday night into Thursday. So here are the ES strategies on the day. Cobra 3 hit its profit target. Adaptive moving average got long and stayed long all day. So we took long trades, or we didn't take these trades today, but the signals took those today. And you can see good trade in adaptive moving average, good trade in Cobra 3, good trades on 60-minute breakout. So just 3 strategies traded. We have 20 strategies, and 3 traded today. We don't trade every strategy every day. They are different types of signals in this setup. EVP1 captured a small move at the end of the day. VSD, I thought the market would sell off today. I thought it would rally, and then I thought it would roll over. So once again, we get in these market environments where it should have rolled over here, in my opinion, and then it didn't. So it rallied one more time, and then it should have rolled over here, and then it didn't. The liquidity comes in and says not today, and going into a weekend with the Russia-Ukraine conflict, it's very contrary and surprising that the market did not sell off, and so sometimes that happens, and our long strategies made money. This strategy made money. It's short right now. We'll exit before the futures close, but this strategy was short yesterday, reversed to long, short overnight, reversed to long, up on the day, reversed to short right here. I thought this was going to be a good trade. I thought it was going to sell into the close or at least take out these lows. Turned in, stopped out, got short again. The total volume on the day is more negative. It became increasingly negative as the market rallied. The selling volume on the day increased, and that's why I went short. So that's what's unusual. The divergences we're seeing in the actual in the markets as they as markets roll over, the volume, there's more selling volume, but the market does not sell on days like this when it's just determined to go up no matter what. Gap continuation just barely stopped out. We talked about a larger stop loss here. This is a 35 point. We need about a 100 point stop loss on this. And tick pullback, nice day here. Really good entry, really good trade on the day. You can see how real trading works though. You get in a strategy like this, you give it almost all back right here. You know, at the end of the day, you go, oh, that's a good trade in hindsight. But when you're trading it, sometimes the psychology gets you. You think, oh, yeah, I'm up here. Oh, no, it's starting to roll over. I better get out. It's going to take it all back and run my stop. And then it turns around and runs up. So that's why we trade the strategies, because the market doesn't always do what we think it should in the short term. Stock index swing captured a small trade at the open. We've talked about a bigger stop loss, our bigger profit target on this one. We put the bigger profit target in the portfolio calculator. Cobra 2022, profitable the last 2 days. We had 1, 2, 3, 4, 5, 6 Nasdaq strategies that traded on the day. So let's look at the 200K trades. So here is the zigzag indicator. 38 zigzags today. It's pretty high count. We're going to look at the 200K trades. The CVIX is at 1.38. I continue to work on better intraday volatility indicators, and you see one here. This is the number of zigzags in a day. 140 during the financial crisis. This is based on 1/3 of 1%. We've done 50-point moves based on point values, and this number right here is the highest based on 50-point turning points. There's 75 50-point turning points, also 75 1/3 of 1% turning points here. And if you put in 50 points, these peaks are lower, but on a percentage basis, they're higher. And how else would you define volatility? The number of days it's above 10, or the number of days this is above 20 based on a percentage basis. And you can see here that this is trending higher since 2018. From the housing crisis peak to 2018, it's gone lower. It's trended lower. Number of days in the last 250 trading days, which is about a year, that it's been above 10. And so you see it decreases into 2018, and now it's increasing. This is higher than 2016, and this number is higher than it's been since except for the financial crisis. And so it's not coming back down. It keeps making higher lows and higher highs. And so you have to wonder, what is in the market? What is this telling us? Is there something that no one knows? Why does volatility increase? It's usually the sign of a trend change or something major that's about to happen. And so we continue to see an increase in volatility, and the number of days that we see turning points above 1/3 of 1% is increasing over the past year. And so let's look at the trades on the day. As we look at our volatility indicators, here's the volume sum day indicator. You can see how it was negative overnight. It went positive here, and then it rolled over to negative as the market floated higher, as it floats higher into the close. Like I said, some days they're just going to push the market up regardless. And here's our Cobra 2022 strategy. Had its first loss out of a series of winners. You had 1, 2, 3, 4, 5, 6 winners. Huge week for this strategy. And then Cobra 2022, we put that in the stock index 40. And then this strategy right here did really well on crude oil this week. Captured the long trade, captured the short trade, captured the long trade, stopped out on this long trade, caught the short trade. Brand new equity peaks. This one kind of lagged. I didn't think it was going to perform, but it made equity peaks this week. Cobra 2022. We developed this in Q4 of 2021 and have watched it going forward in 2022, have traded it some on the Nasdaq. And let's look at soybeans. Both of these lost today. This was one of the big winners of the week, the short trade here on soybeans, and this one lost 2 days in a row. Natural gas, no trades. Crude oil had one trade today, a little bounce here, SR counter trend 3. Copper had some trades this week. The short side lost. Silver, 2 trades this week, no trades today. Weird patterns in the commodity markets, just a parabolic move higher. The market is treating these moves like they're exhaustion moves to the upside, and that they're selling into these rallies in the commodities, and they're buying into equities at 13,000 on the Nasdaq. And looking at gold, some profitable trades this week in gold. Let's see, Nasdaq. So these are some of the Nasdaq trades today. The big trade was tick pullback, over $3,000 gain on this trade, holding it into the close. Cobra 3 has also started to recover. Made a video earlier about that. 3 trades in a row in Cobra 3, but look at how it got beat down. This is the $600 stop loss version and how it got beat down. Let's take a look at the settings here. This is not the range filter version. This is just the basic Cobra 3 version that we were trading, and it had a significant number of, it had a brand new losing streak of about 15 or 16 in a row, and now it's bouncing back. The $2,000 profit, $2,000 stop loss and $12,000 stop loss are up here at equity peaks because they didn't get stopped out as much, and so sometimes a tighter stop loss can be more risky if you get stopped out too much. So here are the ES trades on the day. 60-minute breakout, Cobra 3. Those are the only 2 in the 200K portfolio. The old one that we were trading that struggled in January. The 50K portfolio that we were trading that struggled in January had a profitable Cobra 3 trade and a profitable SR counter trend 3 crude oil trade. So those are the trades on the day. I want to show you some potential improvements for the stock index 40 portfolio. So coming into today, what we've done is we've not applied any of these filter rules. We have removed the 2 biggest dogs, which are gap continuation and reversing in the S&P, and put in conservative instead. We have taken gap continued 2019 with the $700 stop loss and use a $2,000 stop loss. And we have removed VSD long short. So three changes. Reduced the drawdown from 78K going back to 2008 to 44K. And this one's probably at an equity peak today. So if you look at this drawdown curve, the worst case drawdown since 2016 is only in the sub 35K range, around 32, 33K. Let's see what those numbers are. It's hard to get that exact number when clicking on the chart, but it's around 35K actually. So it is 35K going back to this time frame, which is 2015. So go back to 2015. Your worst case drawdown is about 35K, and the other one is about 50K going back to 2015. So, and then going back to 2008, your worst case drawdown is 78K. In this case, you're at 44K. If you don't trade on FOMC days, it's about the same. It's a little worse. So FOMC helps just a little bit. Actually, it helps. It helps to trade on FOMC days. This is 48.31 if you trade on FOMC days, and it's 46.92 if you don't. Not a huge difference, and you can't know how the slippage would have been on every single trade in the past. So you might have had more slippage on those days. So you can trade on those days, or you can take those days off, and it's not going to make much difference. So that's good to know that FOMC days do not make or break. We don't want any one trading day to make or break our trading systems. So very little, any given calendar date should have very little effect on the way our strategies work. And so we want consistency, and you can see that here. You could try other filters too. What if the zigzag indicator is less than 20? It helps it on the drawdown, not on the total profit over drawdown. The drawdown goes down, total profit also goes down. So what about CVIX threshold? Didn't help it that much. So All right, those are some updates. I'll have more. I'm gonna put a video about these updates specifically. The one additional thing I want to do is find a more conservative version of VSD that doesn't let give up so many big gains. I like loosely parameterized trading systems, but VSD has given up too many big trades. If you can see right here, it gave up the short trades yesterday. This big short trade right here, up 7,000 on 8 micros. It gave it all back. Reverse to the long side was up on the day. You know, when you back test it with simple parameters and then you try to capture or prevent those kind of things, oftentimes you'll get worse results. And so that's why on any given day sometimes a strategy looks stupid, because when you try to do everything you can to maybe capture it, overnight gains, get out before they give it back based on an overnight profit. And if you add that rule, it affects a lot of other strategies or a lot of other trades within this same strategy. And so any given trade can look really bad in a system. If you optimize it, it won't look bad historically. But if you have a raw strategy that's not curve fitted, sometimes some trades are going to look really bad, and that's the case here in VSD right now. But I still want to work on it, see if there's a way to improve this without over optimizing it or curve fitting it. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.